President Trump's big, beautiful bill is set to have a major impact on Americans' federal tax returns. The SALT deduction, a major point of contention in the bill, raised to a $40,000 cap on returns for money paid in property taxes, state income, or sales taxes. States like New York and New Jersey have some of the highest property taxes in the United States. Some House Republicans in those states still fighting for an even higher cap. Joining me now is Cardone Capital CEO and private real estate investor Grant Cardone. It's great to have you on the program. Thank you so much for being here with us. First, want to get your take on the SALT cap that we're looking at right now in the House version of the bill. Some people even angry about that, but others saying at the end of the day, this is a small piece of it. It doesn't have a huge impact on the bigger picture. Others just outraged by the idea of it.
Yeah, it's a tiny piece. And for anybody to spend any time arguing on this, it's just politics. It's not what the American people need. What the American people need is relief. This bill that President Trump is trying to push through right now and sell to the American public is less regulations, lower interest rates, lower taxes, the things that are going to free up. The congressman before me was speaking about freeing up the marketplace so investors can enter the housing marketplace, which is frozen right now, Jackie, as you know. And it's preventing homes from being sold, transactions from being made, and it's stalling out the American economy.
But we're also seeing some shifts that we hadn't seen before. The trend was that anybody who had a low interest rate mortgage wasn't leaving their property and they were holding on to it. But now we're starting to see more inventory on the market. There's about 500,000 more sellers than there are buyers right now. You see in certain areas, and they're pockets that are potentially, can be reasoned out to be areas of the country that don't represent the rest of the country, like we're talking about Florida or the Hamptons. But there's softness in these markets that we haven't seen before.
Yeah. Well, because you have, supposedly we have a housing crisis of too many homes or too few homes in this country. But in reality, what we have is a housing crisis caused by Jerome Powell. He has done more damage to the middle class and to housing in this country than any other single Fed or any decision that has ever been made out of Washington, D.C. These higher interest rates, Jackie, are preventing people to be able to buy homes. That's why you have 500,000 more homes listed than buyers for those homes. When the rates come down, prices will also come down with it because you'll have more supply in the marketplace, and supply is what controls prices. When you have a high supply but no demand because the rates are too high, you don't have buyers coming in to reach those homes. The prices stay up. And this has been proven over hundreds of years. Interest rates do not control prices. Lower interest rates would actually stimulate activity, and activity is what makes the economy work.
Grant,
so
I've got some panelists here who don't agree with that assessment. Kenny, jump in.
Grant, listen, I hear you, but I have to tell you, I think the problem was that they kept rates too low for too long, and they created this explosion in the housing market. I think now what has to happen is rates have to stay where they are and allow people to recognize that housing prices have gotten out of control, and they need to come down on their own. If they lower rates now, it's only going to ignite the housing market once again, which is not where we really want to be.
I'll go, Grant. I'm going to weigh in and say, I want to take the other side of that and say it's a frozen market. I think you're totally right. You need some movement. 100%. And by the way, a little data point. Last month, the PC, the Fed's preferred indicator of inflation, showed that housing and rentals up 27% in 1 month. Something has to change because that is really hurting American consumers.
Yeah, Kenny, look, it's a nice suit you have on. I was on with director of Fannie Mae and Freddie Mac yesterday. And Bill Pulte, the director over there at FHFA, is like, we have to have lower rates in America. Lower rates do not promote pricing. It is the marketplace that decides what price to pay for anything. So lower interest rates do not control inflation. He has kept rates up. Inflation dropped, okay? And not because of the higher rates, but because President Trump is coming to America, brought enthusiasm, optimism, and the speculation of opening up the marketplace. So we have to get, if you want homes to move in this country, we need investors back into the marketplace, and we need buyers back into the marketplace able to get a low interest loan.
Right. Or you need housing prices to come down, right? That will also balance it out, because if the housing price comes down, then the rate, it offsets it, right? If they lower rates and housing prices go up, it's going to be the same argument. Yeah, you got a lower rate, but you paid more for the house. If the housing price comes down and you got a higher rate, you lock in, and then as rates come down, then you can refinance at a lower rate and continue to build it that way. But I'm in the camp that he absolutely should not be cutting rates at this moment.
And we are allowed to have a healthy debate about it. But Grant, before I let you go, because I only have a minute left, I want to get to this. You just announced the launch of the 10 times Miami Bitcoin Fund to coincide with your Miami River real estate portfolio. Tell me more about that, and why Bitcoin?
Yeah, we're adding Bitcoin to the purchase of cash flow positive real estate. So we're taking large complexes. The rental market's going to continue to win and benefit from Jerome Powell's ridiculous policies, by the way. What he ought to do is cut rates. Trump should do everything he can to cut out Jerome Powell. And what we're doing basically to handle this problem is merge an old asset class, real estate, with Bitcoin, a new asset class, and we take returns on real estate from 12 and 15% a year to 35 and 45% a year, believe it or not. It's a phenomenal vehicle, and I believe it's going to revolutionize the way people invest in real estate.
All right, it's really interesting as a concept. We're going to have you back on, dig into it a little bit more. Grant Cardone, thank you so much.
Thank you.